I'm Andy Agafangelo. I'm the founder of the Transparency Task Force, which is a certified social enterprise. We're based in the UK, but in total, we have people receiving our communications in 21 countries around the world. In total, there's approximately 4,000 people who get the Transparency Times each week. We've grown from scratch, we've grown from nothing since way back in 2015. And we have a formal mission, and that formal mission is to promote reform of the financial sector so that it serves society better. Now, we believe that the financial industry is profoundly important to the well-being of society, to economic stability, and to political stability as well. But despite the potential value of the financial services industry doing a lot of good, whilst in many ways it does do a lot of good, it also does a great deal of harm. We've only got to think back to the tragic consequences of the global financial crisis to understand that. Not only did the banking misconduct that led to the global financial crisis cause carnage financially around the world, it also led to devastating life outcomes for many, many people. In fact, according to some research done by Oxford University, over 10,000 people took their lives as a consequence of things caused by the global financial crisis. Typically, these were people who were impacted because of the devastating state of the economy. Many people lost their jobs. Because they lost their jobs, they had no income to pay for their mortgages. Because they were thrown out of their homes, it impacted their family lives. And those breakups and heartbreak and devastation ended up with some people quite literally losing the will to live. So Transparency Task Force very firmly believes that the financial industry is remarkably powerful, remarkably important, remarkably significant to everybody's lives. But it's allowed to misbehave. And I'm using those words very, very thoughtfully. It is allowed to misbehave. At some stage during tonight's session, I'll show you all some data that shows that the financial services industry has a terrible reputation in terms of violations, in terms of breaking the rules. And it's really quite impossible to look at the hard data without getting suspicious about why it is being allowed to misbehave so badly. And I think that takes us straight to Hester's book. With Hester's book is an expose. It's a wonderful expose. Hester, as well as being a remarkably good lawyer, is also a whistleblower. You are going to learn about things that Hester discovered, sometimes proactively, sometimes things she just came across, that have caused Hester to become a whistleblower and an advocate for reform of the system. To give you a clue on how significant Hester's work is, when Hester and I met in Dublin a few weeks ago at an event, it was in January, a few months ago at an event in Dublin, I remember asking Hester if she ever felt a little bit kind of vulnerable as a consequence of her willingness to challenge the system, to challenge the status quo, to call people to account, to call regulators to account. I can't remember the exact words that Hester responded with, but I do know this. Hester's a very brave lady doing what she does, and we need more people like Hester. Ladies and gentlemen, I'm about to show you a short clip of a video. It's not in English, but there's subtitles, so please tune into it, please focus on it. But before we do that, can we do something which to me is very, very important? Can we please just show our appreciation to Hester for writing her book, for doing the investigation she does, for speaking out the way that she does? The world needs more people like Hester Bais, and we need and want to support and salute people like her. So Hester, we support and salute the work that you do. It's profoundly important. You'll probably never get a medal for it. You'll probably never get a cup or a trophy. But in the hearts of people like us, you and the work that you do is phenomenally important. And by the way, books are powerful. We're joined tonight by Jared Bibler, who I'm also delighted to have with us. Jared is also a very, very capable author. Hi, Jared. Some of you will remember the session that Jared ran some months ago about his book, about the same sort of thing going on in Iceland. It's going to be remarkable to hear what Jared thinks about what Hester says. But folks, what I'm going to do first of all is exactly as I said. I'm going to play you this video. I do hope you'll be able to hear it reasonably well. You'll need to read it because it's not in English, but tune in, focus exclusively on this, and try to pick up the importance of the messages that Hester gets across. And once we've watched this, we'll all listen to Hester.
De kredietcrisis van 2008. Mensen verloren hun baan, konden hun schulden niet meer betalen en bleven zitten met onverkoopbare huizen of een enorme restschuld. Het is een kwestie van tijd totdat de nieuwe crisis het leven van gewone mensen opnieuw op zijn kop zet.
Ik ben Hester Bais. Na mijn studie rechten en economie startte ik in de jaren 90 mijn carrière als jurist bij de ING-bank. Daarna werkte ik bij de toezichthouder AFM en bij de beurs. Nu ben ik advocaat financieel recht. Ik verricht al ruim 10 jaar onderzoek naar de gang van zaken bij banken en naar het toezicht in de financiële wereld. De feiten die tijdens mijn onderzoek licht zijn gekomen, zijn ook
Het verdienmodel van banken leidde tot de kredietcrisis van 2008. De oorzaken hiervan zijn nooit aangepakt. Integendeel, met hulp van politici, toezichthouders en de Europese Centrale Bank hebben de banken via fraude en netwerkcorruptie hun bankenmodel in stand weten te houden. Banken verdienen maximaal door geld zo hoog mogelijk aan te en door het zo duur mogelijk uit te lenen. Dat systeem is alleen mogelijk als banken producten en elkaar onderpand verstrekken. Dit onderpand is niet voldoende beschikbaar op de financiële markt. Het onderpandtekort in Nederland bedroeg ten tijde van de kredietcrisis 200 miljard euro en in Europa het veelvoudige. De financiële wereld verbloemde dat tekort onder meer met behulp van de Europese Centrale Bank door het benodigde onderpand te faken.
Het systeem kan werken zolang financiële instellingen elkaar onderling vertrouwen. Maar het zakt als een kaartenhuis in elkaar als bijvoorbeeld consumenten of bedrijven niet meer in staat zijn om de afgesloten leningen te betalen.
De economie dreigt opnieuw te bezwijken onder het verdienmodel van banken. De tijd tikt af naar het volgende grote financiële inferno. En de gevolgen zullen nog verwoestender zijn. Want het onderpandtekort is alleen maar groter geworden en het model risicovoller.
Ik zie het als mijn plicht om mijn ontdekkingen over het bankensysteem aan het licht te brengen. Zo doe ik al sinds 2014 aangifte bij de AFM, de Nederlandse Bank, Field en de Algemene Rekenkamer. Vanaf 2018 ben ik bovendien klokkenluider bij de Amerikaanse toezichthouder en visie.
De ontdekte feiten zijn gepubliceerd in het boek Worst Bank Scenario. In Worst Bank Scenario wordt aangetoond dat de Europese Centrale Bank de rente heeft verlaagd om grip te krijgen op de onderpandtekorten van banken. Dat het onderpandtekort van 200 miljard nooit echt is opgelost. Dat de pensioenfondsen banken hebben geholpen dit onderpandtekort van banken te verhullen. Dat de Nederlandse banken de kosten van het verhullen van de onderpandtekorten hebben afgewenteld op ondernemers en semi-instellingen. Dat het leraren-, zorg- en woningentekort deels veroorzaakt is door dit verdienmodel. Dat buiten het parlement om wetswijzigingen zijn doorgevoerd om de onderpandtekorten blijvend te verbloemen. Dat in de jaarverslagen van grote banken enorme balanscorrecties zijn verricht, terwijl de toezichthouders de andere kant op keken. Dat onze kinderen straks alsnog de rekening moeten betalen van de honderden miljarden euro's die nu worden uitgegeven in Europa aan maatschappelijke projecten.
Fraude en corruptie blijven een schaduw werpen over de financiële wereld en dat moet stoppen. Ik pleit daarom voor een structurele hervorming van de financiële sector. We moeten ons verenigen en niet meer toestaan nieuw slachtoffer worden van deze ongebreidelde geldmachine. We hebben jullie hulp nodig. Hoe meer publiciteit deze misstanden krijgen, groter de kans dat de financiële wereld eerlijker, veiliger en transparanter manier wordt.
Wonderful. Hester, I think you're absolutely wonderful. I really do think you're absolutely wonderful. Folks, that video has given you a feel for the seriousness of the things that Hester has discovered. Please, please trust what Hester tells you to be true. Her book is remarkably well researched, as is Jared's, and so many others. There's a wonderful book by Andy Verity. Some of you know that, the book called Rig. We're at a point now where it's the journalists, it's the authors, it's not the politicians and the regulators who are sorting this mess out. It's people like Hester, people like Jared, people like Andy Verity, and it's wonderful that they're doing it. Hester, we would welcome you talking to us about your book, about your discoveries, and frankly, about anything you'd like to share with us, because all the people here are seriously interested in this topic. Most of the people here are individuals whose lives have been harmed significantly as a direct consequence of egregious malpractice, malfeasance, misconduct, mis-selling, outright fraud, manipulation, cheating, theft, robbery by financial institutions that we were all brought up to trust. So you're talking to an audience that really does relate to your work, Hester. Hester, over to you. Thank you very much. Thank you.
Thank you, Andy. I hope you can all hear me well. I'm very honored to tell you my story as a whistleblower today. And that gives me hope, because daring to face the rot in the financial system creates a collective willingness to turn away from the system and build a fairer, safer, and more sustainable system. You have just seen our campaign video, which has recently been subtitled in English, and which will hopefully be shared by you all. We need your help to spread this important story. Important because the credit crisis was not the end, but the starting signal for a new monetary system, including the so-called Transmission Protection Instrument, or TPI, launched by ECB in 2022. This fraud is complex, so I encourage you to read the English version of the book, since it's relevant in respect of interest rate surcharges, additional collateral requirements, misvaluation of assets, the sale of non-performing loans to vulture funds, and, last but not least, the LIBOR scam. ING and its former insurer Nationale Nederlanden played a key role in the worst bank scenario, supported by the Dutch Ministry of Finance, the Dutch Central Bank, and the conduct supervisor AFM. The biggest collateral fraud ever had been executed. And as I explained in the video, this lack of high liquid collateral caused by using OTC derivatives amounted to no less than 200 billion in the Netherlands and, for example, 300 billion in the UK. The lack of collateral in respect of OTC derivatives last 16 years, solved by the purchase program of ECB and central banks, needs to be financed with a newly created European sky-high debt mountain, and leads to the loss of sovereignty, the devaluation of money, and the disappearance of cash, as well as the enforcement of a joint, unhealthy European budget. But before this system could function, a problem had to be solved first, namely the enormous shortage of collateral. As I explained in the video, this shortage amounted to 200 billion in the Netherlands in 2008 and a few thousand billion in Europe. ING is the largest commercial bank in the Netherlands, and with a shortfall of 186 billion in 2014, ING is also by far the largest party in the great Dutch bank fraud. This fraud is the result of lucrative and perverse in-house interest rate management between banks and both insurance companies and pension funds. During my work as a lawyer over the past 12 years, I have come across a massive collateral fraud covering up the shortages internationally. And it all started with an individual so-called interest rate swap of a business owner, concluded by ING Bank. A swap is a complex financial instrument that is not traded on an exchange, but is traded over the counter, also referred to as OTC trading. And this client turned to me in 2012 because the fixed interest rate that the business owner was promised with this interest rate swap construction had been increased during the term as a result of the so-called liquidity surcharge. This client had never heard of a swap until 2008 and had no interest in it. For the bank, it provided an additional product, namely a loan in combination with an interest rate swap. The bank charged an excessive commission for this swap, and bank employees received high sales bonuses. According to the bank, this financing structure was identical to a fixed rate loan, but the bank forgot to mention that the interest rate swap developed a market value during the term, and that that market value had to be covered by highly liquid collateral, as with derivatives that are traded on the regulated markets. The bank solved this by providing collateral in the form of additional loans called margin credit without the customer knowing or having interest in it. And although the loan was free, falling interest rates from 2009 onwards caused massive liquidity problems for the banks due to the increasingly raging negative value of those swaps. But this was not all, because banks secretly had this collateral financed by their own insurers and pension funds and did not deduct this financing from their solvency. The insurers and pension funds also ran into problems due to the fall in interest rates. The house of cards collapsed, and this in turn had an effect on the borrowers without a swap. Banks caused a financial carnage, and many business owners were dragged into bankruptcy by their banks. However, over the years, I discovered that the house of cards was deliberately dismantled at the expense of the citizens and at the expense of prosperity and the real economy. That is why I have decided to have my story written down in the book Worst Bank Scenario, which has also been available in English since November 2023. Worst Bank Scenario shows the route that the 200 billion shortage travels from its inception at the financial groups to the balance sheets of the Dutch Central Bank and ECB, as a part of the new so-called multipolar monetary system. At the same time, the Dutch state guarantees in favor of EU emergency funds grew from 2008 to 2012 to 200 billion euro. During this route, the Dutch collateral shortage was unlawfully placed with Dutch pension funds ABP and pension funds PFZW. Although state aid could be requested for this liquidity shortage in 2008, which I will explain later, Dutch banks had apparently decided that they would rather obtain guarantees through pension pots than from the government. After all, the latter was bad for competition and for bonuses. And in addition, the new banking model that was part of the intended monetary system would also obtain highly liquid collateral through pension funds and insurers. That is why the pension reform is necessary, which was implemented in the Netherlands last year amid much protest and is now in doubt after the elections. Although my journey started in 2012 with a business owner duped by a so-called interest rate swap, I quickly discovered that it is actually all about collateral. The bank covers the interest rate risk of lending money long-term and attractive money short-term with interest rate swaps. And because interest rate swaps have a price, a so-called market value, due to fluctuating market interest rates, professional parties who conclude these interest rate swaps also require collateral from each other. And as mentioned, this collateral must be highly liquid. A lively trade in collateral has emerged. Lower quality collateral, such as packaged mortgage loans, also known as mortgage-backed securities, is temporarily exchanged for high quality collateral. This could be money, but also government bonds from countries that have their budgets in order. However, because there is no sufficiently high liquid collateral, and fewer government bonds are suitable due to the deteriorating financial positions of member states, it was decided that European bonds, called Eurobonds, should be the solution. And it is therefore the shortage of highly liquid collateral that is the actual reason for creating the debt union. And under the guise of climate, inclusiveness, energy, security, education, and war now, the bonds press has been encouraged to print new EU debt. And the liquidity shortage that existed in 2007 was therefore a collateral shortage as a result of the use of interest rate swaps. The majority of the money printed by the central banks after 2007 did not end up with the citizen, as banks led to believe, but filled the bank's collateral caps. The former president of the Dutch central bank, Nout Welling, joined the Bank for International Settlements in 2006, and the institution that rolls out rules for banks worldwide to regulate liquidity and liquid collateral in particular. And I think it's good to know that the Basel rules until 2008 did not regulate liquidity, but only solvency. And liquidity was regulated in the Netherlands, but it was not regulated in every country, so they had to harmonize it worldwide. And the BIS was involved with this liquidity management. From that moment on, the demand for liquid collateral increased, and upgrading collateral became the new lucrative business of both central banks and market parties such as Goldman Sachs and BlackRock. Customer collateral had to be transformed into collateral that banks could use for their OTC derivatives. And since most customer collateral, such as mortgages, is not tradable, banks bundle them and package them in digital packages so that the bank can trade them digitally. And this is called originate to distribute, or securitizations, and forms the core of the new monetary system. And as of now, I read a paper in June of June 23 from the evaluation of the collateral directive by the European Commission. And the European Commission advised to also include emission allowances and commodities into the collateral system. So I think we can expect that they want to make carbon allowances liquid in the short time, and that carbon, for example, carbon will become a part of the system. In our book, we call these so-called securitized mortgage loans digital boxes. The values of these digital boxes depends on the quality of the mortgage loans in those boxes. And in the event that the economy deteriorates and people can no longer bear the mortgage payments, the value of the digital boxes decreases. From 2007 onwards, banks no longer sell these package mortgages in digital boxes to third parties, but keep themselves and exchange them with, for example, pension funds or insurers for collateral that is highly liquid, for example, the Euro bonds, such as a cash balance or the government's bonds issued by member states that are financially healthy and have a high rating. That happens in the repo market, and banks can then use this collateral that they receive temporarily for their OTC derivatives. And we explain this all in our book. However, this trading in digital boxes causes another problem. The quality of the mortgages must be in order. And given the bad quality of mortgages and non-performing loans in the crisis, banks decided to sell many loans to so-called vulture funds. Kees Maas was the former CFO of ING, from 1996 until 2007. And in 2008, he switched to Cerberus, a well-known vulture fund. And of course, this transfer is no coincidence. According to the Cerberus website, Kees had advisory positions at, amongst others, EY. And this is the ex-accountant of ING. And he also participated in the Monetary Committee of the EU. In worst bank scenario, we describe the network corruption in the financial markets. But the interest rate also offers a solution to make the customers' collateral, such as mortgage rights, liquid. As mentioned, banks lend liquid collateral to their own customers without customers knowing or having any interest in it. I discovered these margin accounts in 2012, and in 2013, I discovered the closure of ING's OTC reporting system, which removed these margin accounts and therefore margin from the bank systems. Other banks also removed margin credits from their administration and systems in the following years, and they carried out this fraud with the help of the supervisors. To finance these margin credits, banks had provided internal collateral with insurers and pension funds, creating fake collateral. And that model had to be ended, and it was the English who came up with the guarantee scheme for this in 2008. This liquidity support in the form of state guarantees was subsequently copied by the European Commission and the ECB in the rest of Europe. And there was much less fuss in the media about this liquidity support. Moreover, banks did not explain that this lack of liquidity concerned liquidity management with regard to OTC derivatives. And while the film Margin Call was released in 2011, the worst bank scenario was being executed behind the scenes. Mario Draghi took office as president of the ECB in the same year and opened a collateral counter, collateral counter, to replace the guarantee scheme. A European regulation was also issued that forms the basis for the flood of EU subsidies that are now being justified under the guise of war and pandemic. In our book, we explain why the ECB's balance sheet is exploding, and that this is related to the shortage of highly liquid collateral. Well, and what you can see now at the moment is that in 2022, the new monetary transmission protection instrument has been issued by the ECB, and they now say that there's a lot of fuss about the high interest costs by the Dutch central bank. And they say, oh, we have to shorten the balance sheet. But it's all part of the scenario, because banks will remove this by the Euro bonds, for example. I have been litigating for 12 years on behalf of affected SMEs, healthcare and educational institutions, housing associations, real estate funds, private investors, etc. about the so-called liquidity surcharge. I'm still litigating about it, by the way. This surcharge, which was introduced in the Netherlands in 2009, as a result of which SMEs with a variable interest rate were suddenly confronted with a much higher interest rate, even for financing structures with an interest rate swap. The market rate fell. Was justified by banks on the basis that banks had to borrow more expensively on the money market. It is now clear that the liquidity surcharge did not concern the money market at all, and that the Euribor or Libor manipulation was a sideshow. It wasn't even about extended credit to customers. I'm convinced that traders have been deliberately sacrificed for the greater good. The feigned manipulation led to the new securitized overnight financing rate in 2022, same year, and the Libor disappeared in that year. And this was all part of the worst bank scenario. In 2013, during my first court hearing in this file, I wondered out loud whether ING did not have the liquid collateral it had booked on behalf of the customers on its balance sheet, not knowing that ING, ABN AMRO, Rabobank, and SNS jointly carried out a worst bank scenario in which they secretly implemented countless balance sheet system and contract adjustments. In the same year, but I didn't know it at that time, the Dutch Central Bank launched collateral accounts for the non-monetary purposes, such as collateral management for OTC derivatives as part of the monetary operation. And what you also can see is that at that time in the Netherlands we had exemption from the EMIR until 2023. So in 2022, ING, former ING Investment Management, so Nationale Nederlanden Investment Partners, was taken over by Goldman Sachs. And then you see a lot of movements on the balance sheet of the Dutch Central Bank, and you can you also see that the whole operation comes to an end. Sorry, it's and these and the collateral accounts in my opinion, and I'm now thinking about reporting to the European prosecutor, because given the fact that the Dutch Central Banks, I have a presentation of the Dutch Central Bank from 2013, and in this presentation, the Dutch Central Bank explains that it opened a different collateral accounts because it's not a part of the monetary business of the Dutch Central Bank. I am convinced that it's not that I can prove that it's not that the ECB is not independent, and that it's not that this whole collateral operation is executed by parties like Goldman Sachs, and that the Dutch Central Bank and the European Central Bank is infiltrated by these parties, and that it's not a task because if you read the verdict of the German Bundesverfassungsgericht, then it explains that the money from the purchase program comes into the economy, and I can prove that this money never came into the economy, but it was just necessary for the lack of collateral, and it filled just the gaps of the liquid collateral. In the interest of society, I reported the abuses that I found in the files and the collateral fraud I discovered at ING to the conduct supervisor AFM at the beginning of 2014. And it's maybe nice to tell that I worked with the AFM in the 90s. So I was really convinced that I did a good job. But well, however, the AFM did nothing with my fraud reports. And they also invited the Dutch Central Bank in that meeting, but they didn't do anything with the reporting. And in the following months, I was approached no fewer than twice for positions at EY, ING's accountant. And given today's knowledge, I think that EY was probably not interested in my knowledge and experience. After that first report, I continued to report also to other authorities. I also went to the media, and attention was paid to their abuses, these abuses. More and more victims came knocking on my door, and together with a number of other lawyers and financial specialists, I started working hard for a collective compensation, which ultimately came to fruition for some of the victims. And I think it's the same compensation scheme as you have in the UK, with a lot of only for SMEs and not other parties. Also the discussion on non-professional, etc. I know that it's the same. I think they copied it from the UK, the compensation scheme. Although my client won at the Court of Appeal in 2015, and at the Supreme Court in 2019, where the interest rate swap was annulled on the grounds of error, and the liquidity risk was recognized by the highest court, these rulings are still ignored. And in 2018, I discovered the core of the fraud: extensive balance sheet corrections in ING's 2016 annual accounts. You can also find these amendments in the annual accounts of SNS and ABN AMRO, but they are much smaller because ING, all the pension funds centralized with Nationale Nederlanden Investment Partners. No less than 186 billion was added in 2014 and 163 billion in 2015 retroactively. I didn't yet know the total collateral deficit at that moment. I didn't know the total collateral deficit of 200 billion, sorry, and the route that the Dutch state, the AFM, the Dutch central bank, and the bank insurers chose to conceal this deficit. And at that moment, I understood the enormous interests behind the interest rate swap and the collateral file. And I realized that my countless reports had been in vain. And in 2018, I moved to the American SEC as a whistleblower against ING Bank. Last year, I went to, because I discovered that Gary Gensler, the president of the SEC, comes from Goldman Sachs and also from the CFTC. So last year, I also filed a claim, a report, and the whistleblower report with the CFTC. The credit crisis was not unexpected, but was the result of the new monetary instrument that the establishment wants to introduce at all costs to perfect the European monetary and political union. It is therefore no coincidence that Draghi is now mentioned as a candidate for president of the European Council. Draghi is one of the inventors of the worst bank scenario. And as president of in Italy's central bank and chairman of the Financial Stability Forum, Draghi delivered a speech on June 4 in 2007 on monetary policy and new financial instruments. One thing Draghi talked about was the implications of the originate to distribute model for setting monetary policy. And up to that moment, the ECB had controlled the money supply and thus inflation as well through interest rates. Banks were key to this old-fashioned monetary transformation process. And the sensitivity of bank deposits to interest rates changes gave a monetary policy a powerful tool to influence both bank funding and their financial markets activities. And as soon as the ECB raised policy rates, all market interest rates in Europe rose. This brought down the demand for loans and reduced spending, resulting in falling prices and lower inflation. However, that interest rate sensitivity changed at the beginning of this century. And according to Draghi, the development of new financial products and securitizations, the packaging of reselling of loans had changed this classic transmission mechanism and with the way monetary policy works. And the impact of monetary policy on the availability and cost of bank loans had diminished, Draghi said. And the changing distribution of credit risk in the economy also affected how the transmission mechanism works, according to Draghi. And Draghi added, however, that central banks did not yet fully understand how those influences work. And he believed that the financial system resilience to larger shocks would still need to be fully tested. And Draghi warned that the financial system was becoming increasingly uncontrollable. This was 2007, and in the same year, central banks harmonized their collateral policies, and the construction of the collateral management system of the European central banks started. All collateral was centralized by central banks and large market participants, such as Goldman Sachs and BlackRock, because pension funds and insurance do not have a direct access to the central banks. This EU central bank collateral management system will be ready in November 2024. And it's part of a new multipolar monetary system based on different currencies. This system will run on a number of interconnected global blockchain and distributed ledger, technology, payment, and collateral management platforms for professional market participants, combined with digital central bank money, such as the digital euro. For both individuals and professional market participants, the central bank digital currency, or CBDC, is launched. What maybe also good to add is that Draghi wrote several secret letters. They're now not secret anymore, but in 2011. And what he did, and you can check that, is that he wrote, for example, a letter to the together with Trichet. So it was just before Draghi became president of the European Central Bank. He was at that time president of the Italian Central Bank, and they wrote a letter to the government in Italy that they need to reform. But what they did was LCH ClearNet, an important CCP in this whole story, changed the collateral requirements from the Italian government bonds. So the requirement was as a result of that, the interest rate raised. So it was possible via the CCP to manipulate the government bonds and the necessity to issue or to ask for European bonds for the harmonization. I expect that in this system, the system with the tokenized assets, the centralized monetary systems of world powers will be interlinked, and the IMF will act as an intermediary between them. Because an important moment is 2016. That was the moment that the banks were separated from the insurance companies, and China entered the IMF, the SDR of the IMF. So I think that the system of the BRICS will be interlinked. For example, one of the systems is finality. You write, it's spelled FN, FNALETY, finality without the first I. And for example, HQLAX, and that's means high collateral of high quality liquid assets. And that's also a platform built by Goldman Sachs. So that's all distributed ledger, but it's almost finished. It's finished. They are now changing the law to implement this system. In 2008, world leaders, the G20, called this multipolar monetary system Bretton Woods 2.0. And they saw the centralization of collateral as the indispensable bedrock of the new system. But this collateral consists not only not only gold, as in the classic Bretton Woods framework, but also includes other elements such as bundled and packaged loans and the emission rights, as I just explained, the carbon emission rights. And the goal, as of 2011, that's also nice to tell. As of 2011, central banks also bought gold, and they hedge in the new collateral system. They hedge the value or the devaluation of the securitized loans. So all the purchased assets that they have on their balance sheet, and that the assets that devaluated, they hedge it with gold. So you can see it in the Dutch. The Dutch central bank in the annual account. there's 30, the devaluation of the purchase program is 30 billion, and the amount of gold is also 30 billion. To fill this enormous collateral shortages and to boost collateral trading, new bonds of very good quality are needed. And this explains the eagerness with which European bonds are now being issued. And under the guise of next generation the EU, 800 billion is currently being spread uncontrollably across Europe. And in our book, in which we explain the link between the banking crisis and this megalomaniac European project, megalomaan, we say in Dutch, we warn against this excessive debt creation. Money that is taken from our pension funds, among other things, disappears into the pockets of the wrong people, and that will have to be repaid by our children. That's why the book is dedicated to all children. And as mentioned in 2022, the European Central Bank introduced a new instrument without much media attention, the Transmission Protection Instrument. And the TPI allows the ECB to purchase sovereign bonds issued by countries which face sharp interest rate movements that are not justified given their economic fundamentals and that jeopardize monetary transmission. And if necessary, the program may be extended to include corporate bonds. So we called this program until 22 unconventional, and now it's a formal instrument. And the only difference that ECB explains is that they say, yeah, the unconventional policy was necessary, for example, the pandemic problems. And we provided the money came into the economy, and that's of course true because they also had money because of the pandemic. But that was not the problem of the that was not the purpose of the instrument of the unconventional policy. So yeah, before 22, this instrument was simply called unconventional policy. And under the guise of the credit crisis and pandemic, we were able to get used to this instrument. In worst bank scenario, we call this bank model 3.0 and Draghi's discount window. An even more perverse banking model, rolled out without democratic participation, but at the expense of the citizen. I know now that the worst bank scenario has largely been completed in 2022. With the acquisition by Goldman Sachs of ING's former asset manager of pension funds and insurers, nationale and investment partners. And Goldman Sachs, the former employer of Sunak, Draghi, and many others, and the current employer of Barroso, plays a major role in the collateral fraud and in setting up the new monetary system. And as a lawyer, I unintentionally came across this extensive fraud and corruption, and therefore even became an enemy of the state and of the authorities that should actually be there for me and my clients. And due to various chains of abuses, more and more people have been sucked into this network corruption, whether consciously or not, and have become complicit in this extensive fraud. Fraud that was necessary to mask the fact that the financial system is a Ponzi scheme in which those in power mainly line their pockets. And this book is not only an indictment, but also a revelation from an insider who accidentally found herself on the other side as a lawyer. It shows that network corruption poses a serious threat to our democratic constitutional state and the well-being of citizens. And it is therefore a cry for help that I have expressed with all the associated risks and out to anyone who wants to hear it, with the hope that something will change for our children and that the bill for these serious abuses will not be placed on them. Because last but not least, the book is primarily intended to activate and inspire the reader to build a new system. The system must once again become a utility that is fair, transparent, sustainable, and safe. And it is an illusion to think that there is a free market in Europe. Information asymmetry, perverse incentives, and network corruption seriously disrupt market forces. But this is not only disrupt market forces, but also government action. This means that we must build a society in which transparency is the basis and perverse incentives are eliminated and network corruption is no longer possible. And this means that we must trust each other, dare to speak to each other, and be approachable ourselves. For our children, freedom is a given. They will only understand what freedom is when that freedom is taken away. But then it's too late. And we must therefore teach our children to cherish this freedom. At the same time, we must ensure that we protect that freedom for them by not getting sucked into political wars, or nowadays real wars, fighting corporacy and corruption, and imposing the unhealthy, unfair, and unsafe financial system. Any questions?
Wow, wow, wow. I'm sure everyone's going to want to do the same as me. But first of all, thank you, congratulate you for what you've just explained to us. You've given us the essence of a very, very powerful book, and your life experience is truly remarkable, Hester. I've got so many questions. I could hog the proceedings for the next half hour. I promise I won't do that. I want everybody to have a chance to talk. You have set out fraud, corruption, collusion. You have very clearly stated that the regulators are part of the problem. Has there been criminality? Why aren't there being people being locked up in jail? What do we do to make that happen? What do we do to call all this to account and to get justice for what's going on? Because it seems to me the perpetrators just keep getting away with it all. What do we need to do, Hester?
Yeah, well, it's, I think, just keep on going. And of course, when I started in 2014 to report the AFM, I was I thought that I did a good thing and that they would solve this and that they would give a penalty to the banks and to help my clients. So that didn't happen. And now, yeah, I have reported to all authorities last year.
Does see that thousands of women's jobs.
Sorry,
Last year, I visited the, it's called the field, it's the fiscal, I don't know the English word, but it's the authority from the fiscal criminal investigation.
yes.
In my book, you can read that I reported, it's in 2018, I reported to them the 186 billion balance sheet correction, and they didn't do anything with it. So they invited me last year, and there was some guy from the criminal team investigations, and he asked me whether I wanted to report it again. And I said yes, but then I want to speak to someone who has the knowledge. So and I gave him the book, but then I think he had to stand back, and I sent several emails, and I said, well, you promised me that I can report my of this fraud, and then they first didn't respond, and then finally they said, no, you can just go to the website, and they always speak about signals, so you can just upload your signal via the website, and then I sent a letter, and I said, well, I will hold you liable, and also the Dutch state, because it's part of the Dutch state. And also in respect of my own safety, but also the safety of people around me. But I never received any response. So
Amazing, absolutely amazing. But this is the bit that shocks me. It is as if all the individuals whose job is to help people like you to turn your allegations and accusations and to look at all the evidence you've got and turn it into a case against people don't want to do it. There's something grotesquely wrong with the system. I'm going to throw it open to other people to comment here, but to my mind, what you're saying is actually very, very worrying. You're a very credible person with a great deal of information who's written a damn book about all this, and even you are not being helped. Even you are not being helped. This is outrageous. This is outrageous. I'm going to go to Andy Candy. I know that Andy's followed your work for some time. Andy, I know that you're very respectful of the work that Hester does. What comes to your mind when you hear Hester speak about all this? Thank you, Andy.
Thanks. Yeah, I mean, I came in contact with Hester via Twitter, and then Steve Middleton and Bank Confidential and Paul Carlier and others who sort of explained to me the background really to my own case of mis-selling with the banks, which has been raging since 2009, when I was sold one of these OTCs, you know, over the counter derivatives attached to a commercial loan. I was actually under the 500,000 threshold that Mark's referenced in the chat, but effectively speaking, it was a conscious process to deceit and fraud from the outset. There's no way that they could do what they did without it being absolutely masterminded top to bottom. So it wasn't just a rogue relationship manager. This was a systemic approach of fraud by the bank from the outset. And the concealment of the credit lines, the concealment of the margin accounting and all of those things which Hester's obviously exposed in the book, and her book really exposes the background against which this was all being done. So for me, it's well above my pay grade as a former owner of a small design agency that was absolutely and catastrophically destroyed by the bank setting up this in the background against my accounts. And I put an example in the chat which people might want to have a look at, which is quite extraordinary, where another HSBC customer who had basically 750 of notional swap value had a credit line put against him of a further £198,000 that he knew nothing about, was secured against his assets as a hard credit limit, and that expanded with the base rate drops and LIBOR drops or manipulation, depending on how you want to look at it, up to 300 and then 600,000. So you're looking at, you know, something that is just an extremely huge fraud. I mean, just a shocking fraud. And the fact that this has all gone, the regulator's complicit, the Bank of England's complicit, everybody's complicit, because if you look at the press coverage on the pensions sort of scandal that dropped here in the UK after the Truss and Kwarteng budget, the pensions regulator has now come out and made some bizarre statement that the asset losses were in the region of 452 billion, which is astonishing. And you can argue about all the ins and outs of it, but these were customers that potentially knew about the margin accounting function, yet SMEs were absolutely set up like fish in a barrel for the banks to feed off. And it was clearly all a balance sheet accounting fraud on their behalf. And we were the victims of it, and the regulator has conspired with them to keep it covered up. And it's no coincidence that certain key people have moved from internal government positions to heads of the regulator, to heads of the Bank of England throughout this whole process. You can literally trace their pathway. So Hester's work's extremely valuable in pointing out why this was done. And then we're the sort of evidence of the sort of frontline people that have absolutely taken the hit as a result. I mean, the banks were bailed out in far more than one just version that we've suffered as a result of. So I'm incredibly grateful to Hester for exposing this and, you know, waging the campaign that she is, because it's extraordinary.
Yeah, and it's so that I can give you some tips, because then you know where you can look. I checked the annual accounts of ING before the credit crisis, so from 2000 until 2007. And it's very interesting because in the American version of the annual accounts, so not in the Dutch versions, it was stated you could see the repo position, and the repo position grow And in the annual account of 2007, they changed the position of 2006 retroactively in the Dutch statement, and they added 80 billion euro. So the total was 118 billion euro of repos. And I'm convinced that the Lehman Brothers is just a sideshow, or it's just to eliminate the problem. But it's the same with the dividends stripping, which I really didn't understand because I worked with the stock exchange, and the dividend stripping was a hot topic in 2001. So, but the BaFin started that research of investigation in 2007. So I think that's all a sideshow because the whole investigative journalism is working on that. And you see very strange thing in Germany now that they people are not prosecuted, or the law change is popped up in the Corona law. So I think that no one will prosecute it in the Netherlands because these are people who are involved in the worst bank scenario, I'm convinced. And what you see in 2008 is the HIG and Lehman. You see that Goldman Sachs is under supervision, becomes under supervision of the Fed, the Federal Reserve. So they build it up from the beginning of the century. And the problem for the Dutch central bank, of the Dutch state also, but the Dutch central bank, is that I found recently, I think half a year ago, I don't know whether it's in the English version, I think so, but because the English version also contains information that I found last year and the Dutch version not, so that's we have to change also the Dutch version. But in the book I describe we call them hidden clearing houses, helped by or not helped by consolidated by two big pension funds in the Netherlands. And what they did is of course the European Central Bank knew that when they manipulate the interest rate downwards, that the collateral problem will become the problem of the banks. And when it raises, it goes to the pension funds and the insurance companies because it's zero sum. So they knew that if you go to zero or below zero, the problem will be the biggest problem that there can be, and it will be managed by the banks. But the Dutch banks thought, well, we will solve it, or because the future plan, the current plan is that the pension reform has been executed so that the collateral can be borrowed from the pension funds. And in the meantime, the Dutch created a clearinghouse under the ABP, the biggest the pension funds, and the pension funds, Pensioenfonds Zorg en Welzijn, it's also a big pension fund. And at that time, you see all politicians in the managing board. But they had to close these clearinghouses in 2018. I don't know whether they closed it because I knocked on the door of the regulators, and I know that a guy from the Dutch Central Bank committed suicide in the same time. He worked on the supervision, on the resolutions of ING. But as of that moment, if you look into the annual account of the Dutch Central Bank, they changed the valuation dates of the securities held by for non-monetary purposes, which are the collateral, the purchase program. They changed the date to the day before the last trading day. But they didn't explain why they changed that. So the whole balance sheet is valued on the basis of the end of the year, except for this these securities. So we don't know the position on the 31st or the last day of the year. And they changed it back in 22. And in 22, ING or Nationale Nederland Investment Partners has been sold or taken over by Goldman Sachs. And then you see also a movement on the balance sheet from, how do you say that, from the reserve obligations to the deposits. And it's 272 billion. Which means that it's not a monetary operation. It's just but because the trick if you read the conditions from these collateral accounts from the Dutch central bank, they say, well, we have two systems. We have the monetary collateral accounts and we have the non-monetary. But if you read the conditions, you can see that every how do you say, surplus on one of the accounts you can use for the other account. So that's the angle, because they used the reserve requirements for this whole operation, but it was not a monetary action. And yeah, well, the book is now, it's almost 2 years ago. I have not received any, no one says that it's not true or a discussion about the contents. We offered the book in March 23, so it's a year ago, to all the members of the parliament. So 225 people received the book, parliament members. And we also gave the book as a present to the government, a big part of the government. And we received...
Welcome to the downloaded money box, which...
Yeah, we didn't receive any reaction on it. I'm in the supervisory board of a Dutch electronic money institution. And I am in the board with the managing director of former, one of the former big banks. Or one of the big banks, he's former managing director. And I discussed with him, he didn't know the amendments in the annual accounts, but he has not give me feedback that it was not true. And I'm sure that if there are things are not true, he would say that to me. So yeah, I really want to discuss about the content, but no one wants to discuss it.
Hester, if I may, let me come in there. We've got 20 minutes left or so. I want to give other people a chance to respond to what you've been telling us. And frankly, what you've been telling us has just been spellbinding. It's truly remarkable. Hester, have you ever spoken to any anti-corruption organizations? Because that is essentially what you're talking about, aren't you? Have you spoken to any anti-corruption organizations like, for example, Transparency International or Spotlight on Corruption or any organizations like this?
Well, I gave the book to Lucie Wies van der Laan. She's a former politician and she's with the Transparency International in the Netherlands. I haven't heard anything about it. And I'm now thinking about reporting to the European prosecution, the public prosecutor.
So I think that is where I think that's where it needs to go. I think what you've proven, it doesn't want to know what you've proven is that the establishment does not want to know what you want to tell it, because it may already be aware of it and it's scared of it because it's the truth, and your truth is very, very powerful. My big takeaway from our conversation so far tonight, Hester, is we need to find a way to get Transparency International, Spotlight on organizations to actually hear you and to take action off the back of what you said, because I do not think the establishment is going to help you. I think the establishment, frankly, is the enemy here. It's the enemy. That's what we have to fight against. I noted that Dermot wanted to come in to make a comment about the EU, and I also noticed Jean-Christophe Perrin asks, is Finance Watch aware of these schemes? I think you make a very good point, Jean-Christophe. We'll come back to that in a minute. But first of all, let's go to Dermot, and then we'll kind of pass the mic, see what others have to say. Dermot, as concisely as you can, because we've got relatively your time left now. Please do share with us what you'd like to say. Thank you, Dermot. Thank you. You might be on mute, Dermot, so you'll need to unmute yourself. I think maybe we've lost Dermot. Jean-Christophe, let me ask you a question. So why are you asking whether Finance Watch is aware of these schemes? What made you want to bring that question to mind? Thank you.
Yes, hello everybody.
Hello.
My guess is that this whole setup is an issue of public interest, and all the possible stakeholders who have a potential action in making some kind of public awareness and some lobby on the financial system should be part of this solution. Finance Watch is one of the active players.
Yes.
And I had a couple of my LinkedIn contacts at Finance Watch, and I emailed them the invitation for tonight, as well as a number of individuals from the ECB, from the EBA, and also from ISDA. I don't see any one of them connected, but
Yeah.
I think it will be an interesting second step to take then.
I think you're right. I think this is an excellent idea. We know Benoit Lelemond. He's the Chief Executive of Finance Watch. In fact, he's an ambassador of the Transparency Task Force. Hester, I'm going to try to sort out meetings for us with the top people at Finance Watch, the top people at Transparency International, the top people at Spotlight on Corruption, and the top people at Better Finance. You need organisations on your side doing the heavy lifting with you and for you. It's quite remarkable what you've managed to achieve on your own already. Totally, like Finance Watch and organisations like Better Finance, Transparency International, and Spotlight on Corruption in hearing you out. Because I think what you've got is absolute dynamite here, because you've got the knowledge, the insight, and the evidence. We're going to go to Nigel Cairns now next. Nigel, please do share your thoughts. Let's everybody be mindful of time. We need to. So, but we are definitely going to be carrying on this conversation, Esther, after today. Thank you. Please do, Nigel, share your thoughts.
Thank you. Well, firstly, Hester, I'd like to say I have an enormous admiration, basically, for your courage in doing what you're doing. You know, there is enormous risk. It's quite obvious in what you're doing, and you're a very brave person to do it on behalf of so many other people. So,
Thank you.
just to start with that. A lot of what you've been explaining, the technicalities, go over the top of my head, but I think, you know, I've got a pretty good understanding of the broad picture. And something that occurred to me because of a lot of reporting that's taking place in the past few days on our news channels has to do with the infiltration of the Chinese state, and there are concerns about the Russian state and so forth interfering in the institutions of the West, and in this case particularly with the UK. Now, it seems to me that your book is available to the Chinese Communist Party as it is to the Russians, and they may be interested and probably have read your book, I would venture to think. And surely, you know, they would be very interested in the vulnerabilities that they're able to see as a result of the exposure of what you're writing. And I'd be interested to know, you know, do you think that those weaknesses could potentially be weaponized by a deteriorating global situation, you know, perhaps combined Russia or Chinese influences? And I'm particularly saying this because we have, you know, a major European bank that's got a foot in sort of both camps. HSBC has probably got much more vulnerability in China, and seems to be controlled more by the Chinese Communist Party than it is respectful or obedient to the British Parliament, although it's supposed to be a UK bank. And I think there are some sort of supermassive conflicts going on here, and you can see things could deteriorate very, very fast, especially because in America there's all the delisting of Chinese companies and what have you. The thing seems absolutely fragile at the moment. So I'd be fascinated to hear your view on that perspective.
That's really interesting. Let me just sort of summarize that. So, Hester, so do you think the vulnerabilities in the system that your knowledge is exposing could be weaponized? What a brilliant question from Nigel Cairns. Hester.
It is already, for example, Attali, he had a commission in 2007, and he said in 2015 it's defense that creates possibilities. So it's all the war bonds. And Macron worked in 2007 with the French Ministry of Finance. Lagarde was the Minister of Finance, and Macron was outsourced from the French Ministry of Finance to Rothschild. Rothschild advised the Dutch state, and Welling went to China in 2012. So, and if you read articles from the Chinese government from 2009, they were also part of this new monetary system. So I think it's a de-dollarization, which is part of the deal. And if you read, I think it's not in English, it's a pity, because in 2020, August, Welling published a book, and it's called in Dutch ontgelden, which means, it's in Dutch words, it's playing with a word, but it means that there is no money anymore. And he described the new economy, and it's really something that Attali, the socialists, describes. They admire the Chinese central economy, but then in a way of more democratic way. And he writes a book with two intermezzos, and I think he's very. I don't know whether this book is a warning or something, because it's a very strange book if you read it. I read it 2 times and I thought, what is his message? Because he says that the purchase program is contrary to the human rights. He said there are 2 intermezzos. The first is the pandemic, but it's very strange because in the Netherlands the pandemic was in March 2020, and we were not aware that it was that bad. So it's not possible that he wrote a book in a few months. It's published in August, so he had the intermezzo with the pandemic, and then also an intermezzo with the how do you call that in English? In 1953, you had the flood into the Netherlands, the problems with the water. And he describes that all these kind of things are necessary or are good to build, to have new debts and to build infrastructure, etc. Because people are not angry with the government because it's a result of nature. And he came back from China I think last year or the year before last year. Under the reason was that he said, Russia had a good contacts with China, and we don't like that. But and they refer to the human rights. So I thought, well, China. It's also a problem with the human rights. So, and what you see in this whole thing is that it's always Russia who is the enemy. And if you, for example, I checked the problem with the same problem with the Danske Bank on the 4th of September 2018, ING announced with the Dutch state that they had a settlement in respect of money laundering. And ING had to pay 775 million euro. And of course, it's where all Russian clients. But at the same moment, also on the 4th of September, the Danske Bank announced the same money laundering. And the first announcement referred to the to 30 billion euro or dollar, and but it was the same at the time. And if you look into the annual account, it's exactly the position, the open position of OTC derivatives. And it was leaked from a report from Promontory. It's a consultancy firm which is really, I think, corrupted. And if you look into the Estonian branch, then it's also the Russian who did it. But I think it's the same story as the story with ING. And the managing director of this Estonian branch is dead already. So, and they don't know whether they said, well, I'm not sure whether it's suicide or not, but I'm sure that he has been killed. So I don't know the exact agenda, because I think that a very important plan is the transatlantic plan from 2007, because in that plan you can see what is the agenda. And in that plan is also a reference to the Palestinian state and all these kind of things. So it's a plan which is executed together with the monetary reforms and the financing. And I'm just into the financing, but I don't know whether Russia is the real enemy. I think
I think there's been a lot of speculation, rising speculation, that the Chinese and the Russians are looking to remove the dollar as the primary global currency at the moment.
Yeah,
and
but I think
just very recently, the Chinese have been buying up huge amounts of gold and other precious metals. And they haven't got a lot of money to spare. So you wonder what the agenda is exactly at the moment.
Well, I think that it's just a part of the monetary, of the multipolar liquidity system that they already announced in 2008. Also, China announced it, and that they agreed to de-dollarize the system. Thus the dollar is no longer the reserve. And I think that it will be a system based on, there is a very interesting report, you can find it from the Korean Institute of Finance from 2016 about collateral. And then you see that they really wanted to have all those Asian collateral into the European system. So I think it's just an idea of making an ecosystem, they call it an ecosystem worldwide, which is linked to all the tokenized assets, which are centralized by central banks and parties like Goldman Sachs. And I think that BRICS will be linked to that. And I think it's just part of the plan, to be honest.
Fascinating. Thank you.
I have to bring the meeting to a close, which is a shame because it's been remarkably interesting. Hester, Andy Candy put a note in the chat to the ICIJ, the International Consortium of Investigative Journalists. They're the people behind the Panama Papers. I think what you've got there here is really, really important. So I'm going to commit now that TTF will try to work with you to get your message to people who might become helpful allies, powerful influences for good, not the sort of people you've been trying to work with so far, their instinct has been to try to cover up and try to ignore it. In bringing the conversation to a close, we'll thank Hester properly in a moment, but does anybody have anything that they are itching to say before we do wrap the conversation up? I'm sure lots of you have got things you'd like to say. We'll go to Andy Candy next. Thank you, Andy.
Yeah, just a brief one that James Hurley's interested in while we're working with him at the moment with Ian Tyler and Steve Middleton and Paul Carlier for an article on the fraud of hidden credit facilities. as an expansion on from the Ulster Bank thing, which the FCA itself has admitted is a fraud and has been kicked back to the bank to investigate, which is bonkers. But either which way, there should be some opportunities arising from that to then really investigate the background to which all this happened, not just from an accounting perspective, but from an economic perspective, because combined with that and various other things going on, it's stuff that should really interest and concern the likes of Prem Seeker and John McDonnell and David Davis and others, because it's at such a high level. This is, this is of a very high nature and risk to the country. It's not just a few SMEs. I mean, that's where the bloodshed has been mostly spilt, but in terms of what its wider implications are, it's extremely scary. So hopefully they'll pick up on it, and that might be another way to really get it into the more mainstream narrative.
To see, I see in the Netherlands a change in the banking conditions last year, and they changed the banking conditions that they can also ask for collateral. They introduced the loan to value also for consumer mortgage loans. And so the story which we explained in worst bank scenario, we said, well, in consumer loans, this is not the case, but it changed last year. So it is the case. And the problem of the reuse, I don't know whether you have seen the book of the crate taking. It's more high level, but I think it's really a big warning, because they make use of the leverage on the banking balances have been removed off balance to the collateral. And the parties like Goldman Sachs reuse this collateral more times. So in case of a real problem, there's always not enough collateral. So it's, and I think it's really, there's also a movement in the Netherlands that you see now that they say, yeah, you have to borrow more money because of the damage with the groundwater, the water under the ground. I don't know the English word, but that your house is damaged by the water, and you can have a new mortgage loan. So they try to have you to give you high loans. So at the end, if there's a problem, you are not the owner of the house. So
Understood.
I think a big risk.
Hester, thank you so much. I think Mark Wright wants to come in. Mark, would you like to share any brief thoughts before we wrap the conversation up?
Yeah, can you hear me okay, Andy?
Yes, we can. Yeah, and I love that top you're wearing, by the way. I really do like it. Thanks, Mark.
First and foremost, Hester, I admire you considerably, and I know you speak with my chief advisor, Steve Middleton, on a regular basis. My view is at the moment that based on the FCA recognizing that there is an Ulster Bank fraud that they are aware of. Now, I worked for the group for 25 years. I have over 50 whistleblowers that feed me as and when I need. The disclosure that is going out to litigants in person are all fabricated. Take an example of one customer. I could go into any branch with the customer identification number and get the full RMP printed off within 30 minutes. What the bank are doing is they are fabricating every single document so that customers have no chance of winning in court. I have put A&L Goodbody on notice in Ireland, and ironically, when I sent them information, which is all factually 100% correct, that they were aiding my former employer in committing perjury and contempt of court, all of the senior partners of A&L Goodbody have now blocked me. There's one particular case in Ireland where I sent information to ensure that these victims were treat fairly, and all of a sudden that particular barrister has gone on garden leave and a new lawyer has now taken up the case. I put Arthur Cox on notice in Ireland as well, because every single, I mean, I've seen over 100 DSARs, Andy, and I have never ever seen a genuine RMP. And the reason being is that the genuine RMP will hide the hidden credit line, which is basically what the banks. I mean, I have colleagues of mine that will turn around and say on record, if they're guaranteed anonymity, that they had a directive from senior management in the RBS NatWest group that they were to identify every single customer in their portfolio with in excess of 500k in borrowing, and they were to convince them to have a swap. And to convince them to have a swap in the fact that, oh, rates are going up. But I read every single economist, because I was a senior wealth manager at the time at NatWest. So I had the chief economist report come through every single week. And the directive from the chief economist was that rates were only going south. So when everybody signed up to these swaps, convinced by my colleagues, I've got you have to ask yourself, when I was a significant whistleblower at the FCA, why did Andrew Bailey suddenly come across from the Bank of England with John Sutherland as his private advisor? I had an email on a Saturday lunchtime from Andrew Bailey that I was not to share anything with anybody at the FCA, only Andrew Bailey and this guy from the Bank of England. So I gave him the name of the signature forgery trainer that works side by side GRG. So when they needed documents to be forged, the common, the biggest joke at Broadland Business Park in Norwich, which is no longer available, which has had corporate and commercial at NatWest and RBS, the best business was always done at the photocopier. So SMEs that have been destroyed and fake disclosure that is being provided in the courts in Ireland, we've got over 1,000, it's been quoted on Stormont from senior church officials, there's over 1,000 suicides in Ireland alone, and there was one farmer per week which was committing suicide. Now, I done a press release, and I got a response from the housing minister in Ireland. I also got a response from the SEC, because these suicides have to stop. If you have the FCA stating at their AGM that they are aware of and this was down to Steve Middleton and Chris Gordon, that they are aware of the Ulster Bank fraud, why are Ulster Bank customers being pursued so aggressively in court as we speak in Ireland, causing suicides? And we have a major problem here. Like I say, that I think the reason is that when Bailey came over from the Bank of England to the FCA, he took all my disclosures, but if you go to the FCA, there is not one disclosure that I have registered that is at the FCA. Equally, I done a recent DSAR, and whilst I had 100 communications between myself and Andrew Bailey personally, all of those emails have been wiped from the FCA servers.
The same in the Netherlands.
On that very, very serious note, we need to bring things to a close. If I don't wrap up now, I'm going to miss my train home. So unfortunately, we do have to wrap it up. I think everybody is probably feeling similarly to me. I feel a little bit stunned by the power of the evidence and the insights that Hester has shown tonight. I also feel extremely highly motivated to try to get Hester speaking to the right people who might help actually use this intel, this inside knowledge, this understanding to ask very, very awkward questions of people in positions of power and influence. I also frankly feel pretty damn depressed, that it seems the system is as corrupt and as dirty and as rotten and as scoundrel filled as we could possibly imagine. But I won't let that depression last for long, because all the time there are people like Hester and other people on this call, people like Mark Wright, people like Andy Candy, people like Nigel Keynes, people like one who's chasing down corruption and fraud as well. All the time there is people like us with a sense of purpose and intent, and frankly, a willingness to sacrifice her own bloody time trying to get stuff done, there is hope. There is hope. All the time, there is at least one person who hasn't given up. There is hope. Paul Carlier isn't on tonight's session, but some of you already know that Paul Carlier got a really significant win yesterday in the upper tribunal. He's forcing the FCA to disclose stuff about Blackmore Bond that the FCA has been trying very, very hard to not disclose. And I think Paul is a really good example of what can happen if you remain tenacious and committed and persistent and dogged and determined. And all those qualities, Hester, are equally applicable to yourself as well as other people in this conversation. Can we please all show our appreciation to Hester, because she's put in a lot of time and effort writing that book and sharing her thoughts tonight. Hester, that was really, really outstanding. And I promise you, TTF is going to try to multiply and leverage and harness your knowledge and turn it into action and find people who are on the side. Organisations like Better Finance, Finance Watch, Spotlight on Corruption, Transparency International, the people behind Panama Papers, the ICIJ, people like Byline Times, journalists like James Hurley, who Andy Canny mentioned earlier. These are the people that we need to bring together to look at what you've got and do something with it. Hester, thank you very much indeed. Good night all. Have a safe travel if you're travelling. Have a good evening.